Investing versus trading, and which one will make you rich? Imagine two friends. One buys a quality company and holds it for 15 years. Another buys and sells every day. What do you think, who will become richer? Most of you will say it is trader who will become richer. But history says something else. In this video, we will learn what investing is, what trading is, which one suits you, and finally, which approach builds lasting wealth. What is investing? Investing means buying ownership in a business for a long period of time. You believe the company will grow over many years. Instead of focusing on today's price, you focus on the company's future. For example, if you held shares in quality companies like Asian Paints, Infosys, Titan Company, you held them for 15 years. Your money could multiply several times because earnings grow, business expand, dividends increase. Stock price follows profit over time. Investing rewards patience. What is trading? Trading means buying and selling a stock for a profit from short-term price movements. A trader may hold a stock for minutes, hours, days, weeks. They don't necessarily care whether the company is excellent. They just care about the price movement. For example, you buy a share for 500 rupees, sell it for 515 rupees, the profit is of 15 rupees. This is repeated over many times. That's trading. Investing versus trading. Investing is for long term, whereas trading is for short term. The meaning of long term here is you held the stock for 5 years, 10 years, 15 years, or forever. If you are buying a quality company, why do you want it to sell? That is investing. Trading is for short term. Short term means you hold that company for 1 year or less than 1 year or 6 months or 1 month or 1 week or maybe 1 day or maybe 1 minute. You buy the company now, in 1 minute you sell that company. That is trading. Second is investing is for wealth creation and trading is for income generation. What is the meaning of wealth creation? Wealth creation means you held the company for many years and the businesses grow, your value of the stock price grows and your worth grows. Trading is for income generation. That means you want the money maybe now, maybe in a day, maybe in a week, maybe in a month. For that you do intraday. If you want it in a day, future and option for a month or 3 months. Investing focuses on fundamentals, whereas trading focuses on price movements. For investing, you look at the business fundamentals, whereas for trading, you look at the price movement which is happening now. Investing is lower stress, whereas trading is higher stress. In investing, you buy and you sleep. If you buy a quality company, there will be very less stress, whereas in trading, the stress is very high. You buy a company, you buy a future and option, okay, and then at night you do not even get sleep because you are constantly thinking about that. Investing requires less time, whereas trading requires constant screen time. For investing, you buy a company and you close your laptop or your phone and you do not look at the screen at all. Maybe if you are doing SIP, you buy now and then next month you will again buy, next one again you will buy, whenever you have money you will buy. But whereas in case of trading, you will have to constantly look at the screen from 9:30 till 3:30. Investing is lower cost, whereas trading is higher brokerage and taxes. Investing, if you buy from discount brokerage, they either charge 0 rupees as your brokerage or 20 rupees as brokerage. Whereas in trading, you continuously are buying and selling. So you are continuously spending money. 20 rupees buy and sell, and then again you have to pay for the taxes. Taxes like STT or short-term capital gain tax. Short-term capital gain tax you have to pay for whatever profit you earn. In case of investing, you pay a long-term capital gain tax only when the profit goes more than 1.25 lakhs. Whereas in case of trading, you have to pay short-term capital gain tax even whatever profit you have, and that tax is 20% flat for everyone. Trading Investing uses fundamental analysis, whereas trading uses technical analysis. Fundamental analysis, you see the PE ratio, PB ratio, and all the ratios and see whether the company is quality or not. In trading, you do not care about the fundamental, how much good a company is or how much bad a company is. If the price movements are, everyone is buying, you will also buy. When everyone is selling, you will sell and earn profit. Whereas in case of a very good company, you buy when the company falls or you get an very attractive prices. In investing, you buy a company when the price is trading at lower price. Whereas in case of trading, you sell the company when everyone is selling. In investing, lower buying and selling frequency, whereas in case of trading, frequent buying and selling. What does this mean is, in investing, you buy once in a month. You get a salary, you buy. Next month you get a salary, you buy. You are not buying and selling every day. In case of trading, you are buying and selling every day. The frequency is very high. Investing is less affected by daily market noise, whereas trading is highly affected by market volatility. Whatever the news say, whatever news comes like war or any news, if you are investing, it should not affect you. It affects trading because there is continuous price movement and you take advantage of those price movement. Investing is easy for beginners and trading requires more skill and discipline. If you are a beginner or even experienced, even people like Warren Buffett said, you should always go for investing and not trading. Investing is for beginner as well as for everyone. Trading is for experienced person who has already been investing for many years and he has got good knowledge about the market. In trading, more than 90% people make losses. Investing can hold during market corrections. A stock falls, a good quality company falls, you immediately go to buy it. Often uses stop loss and strict risk management. If you are trading and you are hoping that the company should increase, so you have bought it, and now the company goes down, your stop loss is hit, and then you have to book your loss. One is owning a business, whereas another is predicting the price movements. Imagine buying a mango tree. If you are an investor, you will plant a mango tree, you will water it, let it grow for years, and then you will enjoy the mangoes every season. If you are a trader, you will buy the mangoes from the market and then you will sell the mangoes. If there is a price movement, you will get profit or loss accordingly. Neither of the approach is wrong. They are completely different businesses. Common mistakes. You say, I am an investor, but when that price after buying the stock falls for 10%, you panic and you sell. You say, I am a trader, but when the trade goes wrong, you hold that company for many years. Never mix investing with trading. Each requires different rules. Which one should you choose? Choose investing if you have a job or business. You want long-term wealth. You can't watch market all day. You enjoy studying companies. Choose trading if you can dedicate hours every day. You accept frequent losses. You follow strict risk management. You are willing to spend years mastering the skill. Some experienced market participants do both. They keep separate capital for trading and investing account. And they have different rules for investing and trading. Final takeaway. Investing is like planting a forest. It can become dense. And trading is like having a shop. You earn income daily if it is managed properly. Success comes not from choosing the best method. It comes from choosing the one which suits your personality, time, goal, commitment, and discipline.